Hello everyone, welcome back to my YouTube channel. We had a very remarkable week in the stock market history of the United States. Our 11-year-old bull just died on Wednesday, March the 11th. Also, the market crashed so hard that triggered 2 times the circuit breaker, both on Monday and Thursday. Yesterday, March the 12th, was the worst day in the stock market since 1987. That's about 33 years ago. Lots of our young investors may not even born by then. We are officially in the bear market since March the 11th, 2020. I received many requests from younger investors or newer investors asking me how to build their first investment portfolio in this kind of bear market. Therefore, in today's video, I will talk about how to build your first investment portfolio in bear market. It is a beginner's guide. It is also good for intermediate investors. For those of you who's new to my channel, this channel is all about easy wealth building. I am both a long-term dividend stock investor as well as a short-term trader. I trade frequently in the market. I also produce 2 to 3 videos in a week to talk about stock market and investments. You may consider to subscribe and hit that notification bell because I'm in the process of making series of videos to help investors to stick their heads above the water in this kind of bear market. I already made one video called how to trade to win when market sell-off. I also recently made a video called Time to Add Gold to Your Investment Portfolio. This video is one of the series of videos. So without any further ado, let's dive right in. I created this investment portfolio to help newer investors not only to weather the stock market storm, it also will help the newer investors to earn decent dividend yield in the meantime. I use 6 different securities to create this portfolio. I compare them to S&P 500 total return in the recent 5 years. Due to the recent crash, the S&P total return reduced to only 32.97%. The 6 securities that I choose, I will compare their 5-year total return, dividend yield, payout ratio, years in dividend growth, and in how many years, and dividend frequency. After I show you these details, I will then use M1 Finance to create the portfolio with you, and you will see how much percentage I will put into each security. If you are outside the United States, cannot use M1 Finance, that's fine. You can still borrow the percentage that I use to create your own portfolio. You can also search for similar online platform to invest your portfolio with. These are the 6 securities I'm going to use in the portfolio. Not only you have VOO to mirror the S&P 500 performance, you can earn the highest dividend in SPHD, and then you will have the utilities, the best performing sector during the market crash to help you to earn decent dividends as well as to lift your portfolio. And also you have total bond market, and then you have gold components, the gold ETF GLD, and then the gold miner NEM to help you to weather this storm. So VOO is a Vanguard S&P 500 ETF. It has components of all 500 best companies in the United States. The top 10 holdings are Microsoft, Apple, Amazon, Facebook, Google, Berkshire Hathaway, JP Morgan Chase, Johnson & Johnson, and Visa. So you don't have to worry about buying these best stocks. It's all included in this VOO. 5 years of total return, as you can see, is very close to the actual S&P 500 total return is at a 32.46%. The dividend yield is also very high, 2.34%. Payout ratio is only 8.48%, which means the dividend yield can be much increased in the future. It has been already increased at 9.8% within the recent 9 years. The payout is quarterly. The second component in this portfolio is called SPHD. It currently pays out dividend at 6.04%, and it has a strong dividend growth, 10.97%, also pays out on monthly basis. It selects companies from S&P 500, the best companies from United States, among real estate, financials, energy, consumer cyclical, industrials, utilities, consumer defense, communication, healthcare, and technology. Some of the best REITs companies also included in SPHD. The third component in this portfolio is VPU. Even in the bear market, it performed much better than S&P 500 total return in 5 years. It's at 46.64%. And then dividend yield is quite decent as well, 3.35%. Payout ratio is also great, 22.26%, and it also has recent years dividend growth. It pays out on quarterly basis. The fourth component is BND. BND is Vanguard Total Market Bond Fund. If you own this, you own the entire bond market. It grew at 10.78% in 5 years. Payout dividend yield is also much higher than the 10-year Treasury in the United States. It is 2.81% at the current yield. However, it did have little bit of dividend in the recent 3 years, minus 0.12%. It does pay out monthly, so it allows you to compound the dividend more frequently. The fifth component in this portfolio is GLD. GLD is SPDR Gold Trust ETF. 5 years total return is at 33.48%. It does not pay out any dividends, but it does provide you the security, especially in the bear market like this. The last component is NEM. It is a Newport Corporation. It is a gold miner. It actively mining the golds. 5 years total return is the best in this portfolio, is at 114.61%. Payout dividend yield currently is at 1.26%. Payout ratio not bad, 28.24%. It still have room for the dividend to grow. It's already grown about 45.59% in the recent 4 years. It is also paid out on quarterly basis. I just want to add something here about GLD before we go to M1 Finance to create a portfolio. GLD is a gold trust. The fund invests in gold. It tracks the performance of the price of gold bullion. So the trust actually holds the gold bars. The investment objective of the trust is for the shares to reflect the performance of the price of the gold bullion. Now I'm in the M1 Finance. I already entered these 6 securities with different percentage. If you don't know how to make the portfolio, I can go over with you again. But anyways, these 6 securities, VPU I set at 30%, VOO I set at 25%, SPHD 20%, NEM 10%, BND 10%, gold at 5%. So the purpose here is I want a BND about 10%, gold about 15%. So total bond and gold is 25%, and then the rest is 75%. But I also want to emphasize here, I want you to put at least 10 to 20% cash in this portfolio, because when the market goes down, no matter how bulletproof this portfolio is, you still have chance to buy in when the market goes down. So this kind of percentage will help you to create a portfolio that is at expenses ratio is kind of low, 0.12%. And then at a current yield is at 3.195%. So that means every $100 in these 6 securities, it will generate you about $3.20. I created this percentage, only one purpose is for you to have lowest possible expenses ratio, earn the highest possible dividend yield, and with very safe component that will help you to weather the market downtrend. I purposefully put only 25% for VOO because we're expecting the whole market is still gonna go downtrend, and then we don't know how long, and then we don't know the bottom. I purposefully put a utilities VPU high at 30% is because no matter what kind of market it is, utilities is just like a bulletproof because everybody has to use water, electricity, and etc. And I purposefully put gold more than the professional will suggest. They only suggest 5 to 10% in your portfolio, but I use 15% because history proof gold is the best component in any portfolio to any kind of bear market. Total market bond fund also will act as a shield for your portfolio to go down. So that's why I set at 10%. But I don't want to set much higher because when the market does recover, it does not perform as well as other components in your portfolio. For those of you who lives in United States and wish to join M1 Finance, I do have a link down below. You can join with my referral link and receive $10 reward. With this portfolio, not only you can weather the further market downtrend or the stock market storm, earn high dividend. You can also, if you were holding this portfolio for the past 5 years, you can still earn about 22.77% growth rate, even including the past few weeks, the worst stock market in the American history. Lastly, I will go very quickly with you for someone who doesn't know how to put those components into a pie. All you need to do is just click on research and click on my pies and click on create a new pie, and then you just type in, for example, VOO, and then you click on add to basket, and then you click on VPU, and then click on add to basket, and then you click on SPHD, and also click on add to basket. Do not click add until you finish all those addings, and then you click on what else we have, NEM, add to basket, GLD, add to basket, and also BND, add to basket. All right, so you have 6 components, then you hit add. Then it will have this portfolio coming out. The reason I did not like this performance or this portfolio automatically because it's all evenly go on 20% all cross, and then you have higher ratio, and then you have lower dividend yield. Did I miss anything? Let's click edit. Okay, what did I miss? I thought I have BND, so let's add a BND. Okay, and then add to basket and add. All right, over here, then you can select all the percentage you want. All right, just save BND. I was set at 10%, right? And then this one was 25%. Yeah, and then VPU was 30%. And GLD, I was set at 5%. And NEM, 10%. And then this is SPH, I think it's 20%. Yes. So total is 100%, and the pie cannot go anything beyond 100. It won't save. Before you hit the save, you can also click on the pie name, whatever the pie you want to put in. My best pie for 2020, for example, and then you hit the save. And that's it. It will show you the percentage of the performance, and then the dividend yield, how many holdings. You have 6 holdings in this pie, and then expenses ratio is 0.12%, exactly as I showed you earlier. So that's how you create your pie. After you created this pie, your job is basically done. All you need to do is just give instructions to M1 Finance how much and how often you want to invest your money. For example, you wish to invest $100 per week, so you give the instruction on which day you want to, for example, every Friday morning you want to invest $100 into this pie, and M1 Finance will purchase it automatically for you with robo investor. You don't have to buy individual. It will buy it for you automatically according to your asset allocation. And if in the future, if one session of the portfolio is overperformed, for example, you set as 20% and then SPHD one day goes to 22%, when you put in this kind of order, it will not purchase for you. It will wait until it go down to the 20%, then it will purchase. It will prevent you to buy security at a higher price. And then if one component, for example, BND is underperformed, for example, it goes to 9.5%, and this one goes to 4.9%, and then it will purchase for you automatically. You don't have to do any calculation. This computer will just do it for you automatic. This concludes today's video. If you have any questions, please feel free to leave your message in the comment section. And I wish everybody succeed in investing in 2020. If you like today's video, please do not forget to subscribe, like, and comment, and share the video with whoever you think will be benefit from today's video. And also do not forget to smash that notification bell so you'll be the first one to know when my new video comes out. Thank you.